Hello everyone, I'm Hero. Today I'm going to talk about the long-term and short-term Forex trading strategy. What we call the long-term and short-term trading are described in terms of time periods. For example, the long-term trading can be from 1 month to 2 months or even 3 months. In fact, compared with the trades of half a year or more, this long-term trading is more like a middle-term one. Short-term trading is usually to go in and get out of the trade on the same day, or called intraday trading. Or it can be closed in a day or two with a maximum delay of 1 or 2 weeks. Otherwise, it will extend to the long term. The characteristics of long-term and short-term are different. The selection of regional entry point and position aiding strategy for long-term trading requires patience, which is not affected by the intraday fluctuations. This is based on the general trend judgment and layout of position holding and position aiding. The position goal can be 300 to 500 pounds or 700 to 1,000 pounds. Short-term trading requires accuracy. The goal is to quickly move the price out of the cost area in the expected direction after entering the market. The profit goal can be about 20 to 100 pounds. The monitoring of long-term trade is mainly used on daily chart, weekly chart, or even monthly chart, and entry point is determined by 1 hour and 4 hour chart. Let's have an example. This is gold chart, daily chart, HAU USD daily chart. At this point, at this position, the candlestick couldn't exceed the previous high. The combination of this bearish candlestick in hammer line. The previous candlestick is close line. The combination of these two candlesticks indicates the bearish trend. So at this time, you can judge and make a decision of going short. This is daily chart. Let's look at the 4 hour chart. It's entry point. Look, inline appears. The previous candlestick is inverted cross line, and the previous one is hammer line in hammer line. All these candlesticks indicates a bearish trend will appear. The long inline appears after a small inline. So at this moment, you will judge and make a decision of going short. It's a combination of bearish candlestick as 4 hour chart. Specifically, entry point. Let's have another example. This is a GBP USD weekly chart. At this time, the bearish candlestick appears in line appears after the previous yang line. But these two candlesticks couldn't exceed the previous high. At this moment, you can place an order going short with a small position. Have a try. But the market didn't go down. And contrarily, it continues to go up. And then, at this position, the combination of candlesticks still couldn't exceed the previous high. And the combination of a candlestick is engulfing a bearish candlestick. The inline, the long inline, engulfs the previous yang line. It's a signal of bearish. So at this moment, the combination of these two candlesticks clearly implies a downward trend will appear. So you can make a decision of going down. This is weekly chart. Let's have a look at the daily chart. At this position, the inline, inverted inline appears. Although it couldn't engulf the previous yang line, but the next inline plus the previous inline engulfs the previous yang line. So the combination of this bearish inline indicates the trend will go down. So at this moment, you can make a decision of going short. Let's have a look at 4-hour chart. All this candlestick is combination of bearish, inverted hammer, and in cross line, an inverted hammer candlestick. The combination of these candlesticks indicates the combination of this candlestick indicates a downward trend will appear. So at this moment, you can make a decision, place an order of going short. As for our chart, monitoring the short-term trade is based on 4-hour chart and daily chart as the major trend judgment basis. The entry point can be monitored with charts of each cycle below 1 hour, such as 15-minute chart, 5-minute chart, or even 1-minute chart. This requires you to be quite familiar with and have a sense of technical indicators of the markets, being patient and wait until the target point appears, then decisively attack. EUR/USD 4-hour chart. The stop, I couldn't exceed the previous high. And a combination of this bearish candlestick appears. Inverted hammer line. Combination, inverted hammer line, inverted cross line. and inline. At this position, combination of bearish candlestick, the long inline engulfs the previous yang line. It's a signal of bearish candlestick indicating that the downward trend will appear. So at this moment, you can make a decision of going short. It's 4-hour chart. Let's change into 15-minute chart to find an exact entry point. Okay, that's it. We found it. It's 15-minute chart. The combination of bearish candlestick appear. The stop includes combination of yang line on the left and yin line on the right. And the yin line engulfs the previous yang line. And next, long yin line engulfs previous two candlestick. So the combination of this bearish candlestick clearly implies the downward trend will appear. So at this moment, you can make a decision of going short. This is a method of using 4-hour chart to judge the short-term trend, the trading strategy, and specifically using 15-minute chart to find the exact entry point. Whether it's long-term and short-term trading, the key is to construct your own system, which is to summarize your high-winning and effective methods to form a trading plan, and then unshakably implement the trading plan. No matter how good someone else's system is, it's not necessarily suitable for you. This is because everyone's character, concept, execution, and mentality are different. So even if the same system is operated by different people, the results will be quite different. The only thing we have in common is to be familiar with all kinds of technologies related to trading, which is not difficult to master. As long as you work hard for a period of time, you will master the basic knowledge. The most difficult thing is to execute the trading strategy, that is, implementing the trading system, which is the only standard to test whether you can achieve the unity of knowledge and practice, which is difficult for most people. Sometimes the long-term and short-term trading strategy can be used together. Once the short-term trading strategy fails, you can enter the long-term trading strategy. This requires that you have enough funds and distribution plans. You should design them in advance rather than change them in a trading process, which will only bring you disaster.